Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing about what to expect in Nifty, Bank Nifty from here on, along with the key levels for both the indices to watch out for. We'll also be discussing on key sectors and stocks that we should be focusing for the day and for the next few trading sessions. On Friday, if we see during the weekend in our podcast, we discussed a possibility of a potential relief rally as index had approached a tremendously oversold zone, as well as 18,800 zone was acting as a strong support since it was the 200 EMA levels. Rebound in Reliance post its result and a minor reversal in ICICI Bank as well as HDFC Bank has led to both the indices, that is Nifty and Bank Nifty, closing in the green to the tune of 0.5% approximately. This short covering move was led by large caps, and hence both mid cap and small cap indices closed relatively flat for the day. Usually the first signs of short covering move comes in large caps only. Ahead of the FOMC statement, which is scheduled on Wednesday night, dollar index is sustaining above levels of 106 along with the 10-year US bond yield once again which is sustaining around 4.9 levels. Hence we feel one should be a bit careful with the over leveraged positions. Brent crude oil prices have stabilized around $88 per barrel, providing some relief for the rupee. We feel these macroeconomic pointers should be closely tracked as they would continue to act as a catalyst in the market momentum going ahead. Currently DXY at 106 and US bond yields at 4.9 is factored by the market. Any worsening of the data from these levels could lead to continuation of the current negative momentum in the market. Coming to index levels, Nifty post taking support at 200-day EMA at 18,830 has witnessed a rebound of over 300 points from Thursday's low. With this move up to 19,150, index has now witnessed a 23.6 Fibonacci retracement of the downward move from 20,222 to 18,837. Going forward, support for the day would be the levels of 19,050, 19,070, and till index holds 19,050, extension of the current rebound up to 19,270, 19,310 would be on the cards. Any sustainable move below the level of 19,050 on the downside would attract selling pressure up to the levels of 18,950, 18,930 levels on the downside. Looking at the OI data from the monthly series, significant put OI has been built up at 19,100, 19,000 strikes, while on the call front 19,200, 19,300 and 19,400 witnessed considerable open interest addition. Overall range for the day could be 19,000 on the downside and 19,290 on the upside. Coming to Bank Nifty post testing a 6-month low of 42,100, we have seen a good short covering move in Bank Nifty index as well. Going forward, 42,750, 42,800 would be a good support zone, and till this holds we could witness a continuation of the reversal up to 43,450, 43,650 on the upside. From now on, key resistance zone would be 43,600, 43,700, where the 20-day EMA is currently placed. Bank Nifty needs to sustain above 43,700 for any major reversal up to 44,100, 44,300 on the upside. Below 42,750, index could test 42,400, 42,450 zone, which is the 50% Fibonacci retracement of the up move, that is from 38,600 which was seen in March 23 to 46,300 which was seen in September 2023. Let's now see sectors and stocks that are looking positive, keeping the short-term perspective in mind. From a short-term perspective, realty, autos, CPSE sectors are looking positive as these indices are strongly placed above their 20 EMA on the daily chart. Stocks like Canara Bank, PNB post their results are looking stronger from the PSU banking space. From the real estate space, Oberoi Realty, DLF, Godrej Properties saw good uptick in momentum yesterday and is showing signs of fresh up move from the current zone. Action was visible in the CPSE stocks such as ONGC, Coal India, both seem ready for continuation of the up move from here on. TVS Motors from the auto space, as well as Muthoot Finance and MFSL were the from the financial space, saw good price volume based action on the long side. If we observe the FI data, FI sold to the tune of 1761 crores, while DIS bought to the tune of 1328 crores in the cash market. FI's long short ratio for index future remains weak at 12% as they added over 5000 net short in index future positions. In the stock futures side, FIS sold to the tune of 27,700 contracts, while on the options front, FIS sold over 1,09,700 contracts and even sold 1,06,000 contracts on the put side, which indicates possible contraction in volatility going ahead. Just to summarize, the key support for Nifty being 19,030, 19,050, and resistance is seen at 19,280, 19,310. While for Bank Nifty, support would be 42,750, 42,800 level, and resistance would be 43,450, 43,650 levels. So friends, that's all for today. Thank you for regularly listening to our podcast. Wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.